Welcome to this series about capacity and capability building to craft and shape operations, enabling adoption and adaption. As we go through this journey, we take a more in-depth look at selected aspects with a focus on business issues around technological transformation. With these being more in depth on heavier materials, please feel free to review the takeout points if in a rush, but also take your time to go through, pause, and get the real benefits. We hope the skills and expertise shared is of value to you and those you support in this changing world. Please subscribe, add your comments, and share with others. This week, we look at artificial intelligence within the insurance industries. This is used as an example of wider knowledge worker service commoditization around automation and artificial intelligence. By its nature, insurance is a risk-based approach to business. It's insurance policies. Like other industries, there is the transformation of operations around artificial intelligence of their internal operations, as well as the products and services offered, and in reorganizing markets. Automation of operations and the use of artificial intelligence spans from data analytics in actuarial services in policy design to assessment through to artificial intelligence in investigations and reinsurance services through to the operation of channel partners and agents. Artificial intelligence can be used to both commoditize insurance services as well as be a mark of difference within specialist insurance offerings. Thank you for staying. Let us start with a stylized operation and consider selective aspects of the application of artificial intelligence. Sorry if this may seem a little repetitive, but it is the repetition which shows the opportunities around artificial intelligence and the competitive advantage to be had, as well as the risk management. Shared services. These are the common business functions underpinning other areas of operations. Insurance operations have a strong legal component, with artificial intelligence being used in automated contract checking, policy expiry, timeline construction of events, e-discovery, analysis of emails, and general data analysis, to name a few. For regulatory, the real-time monitoring of transactions, risk management reporting, as well as artificial intelligence in financial crime obligations would occur. The use of artificial intelligence in network monitoring, self-healing networks, automated service management, and cyber threat management are familiar. Using artificial intelligence within training needs analysis, reporting and monitoring of career development, regulatory and compliance training, as well as profiling for skilling in behaviors are all areas to be considered around artificial intelligence. Operations is a major area for the application of artificial intelligence with automation beyond the commoditized knowledge worker services. Investments, the management of the insurance policy premiums, artificial intelligence with data analytics used in investment modeling, funds allocation, cash provisioning, as well as in routine reporting and monitoring. Payments, the receipt of payments against policies, as well as the payments of policies. Related to these are compliance and regulatory. From the use of artificial intelligence in monitoring payments, reconciliations, and financial crime obligations, through to reporting customer profiling and identification of exceptions, areas for optimization around artificial intelligence occur. Policy design. Artificial intelligence with data analytics is part of the actuarial activities in policy design and premiums. The risk-based approach of payout ratios is core to insurance. As more data are used in the analysis, the actuarial models are improved. Better policies and returns are established. Onboarding and exiting. This is the onboarding and exiting of customers and in relation to their policies, from authentication of users and companies, to regulatory reporting, to inappropriate policies and premiums, artificial intelligence and more extensive data and analytics are used. Assessments, where the claims are assessed against the policy and determination of payments made. Artificial intelligence can be used in policy scanning for terms, dates, and clauses. The matching of data patterns in previous assessments assists in the process. Investigations, the process of establishing the validity of claims. This may be part of assessments or a standalone function. Artificial intelligence can be used in constructing timelines of events as well as part of forensic investigations. Reinsurance. This is the insuring of other insurers and their portfolios. A specialized area where selective use of data analysis and artificial intelligence occurs. Aspects covered previously, like routine reporting and monitoring, exceptions identification, regulatory and compliance, are again areas for the use of artificial intelligence. Specialist insurance, the insurance of boutique and specialist areas, similar to reinsurance, a specialized area where selective use of data analysis and artificial intelligence occurs. Aspects covered previously, like routine reporting and monitoring, exceptions identification, or regulatory and compliance, are again areas for the use of artificial intelligence. Channels management, the onboarding and exiting of third parties and agents, as well as other channels management. By providing the platform with the artificial intelligence embedded, the processes, and the skilling and training, the assurance of agents and third parties is achieved. Liquidity. Liquidity management for the claims and payments may be included within other areas, e.g. investment management and/or finance and treasury, or may be a standalone function. Liquidity management is often data analytics intensive with modeling of predictions as well as monitoring and reporting, well suited to the use of artificial intelligence. Branded services, the sales, marketing, retention, and service delivery to customers. From routine reporting and monitoring to customer profiling, tailored market offerings, artificial intelligence plays an increasing role. Audit is an area of significance in insurance, and artificial intelligence plays a role in the routine recording for audit, the reporting for audit, and the identification of exceptions for audit purposes. This is just a selection of areas and activities where artificial intelligence can be applied. The intention is the illustrative only and the transferability of principles to other industries. As the artificial intelligence becomes more sophisticated, the processes will be increasingly automated with a change in skills and expertise. An area of insurance impacted by artificial intelligence is the policies and the related product and services provided. Artificial intelligence changes the risk profile of a business with a corresponding change in insurance needs. Insurance for technologists. As a profession, ICT is maturing. While there are a number of high-profile projects which fail to deliver, ICT is still an ubiquity underpinning business. With artificial intelligence, the material impacts are likely to increase with a corresponding change in insurance policies, including liabilities and indemnities for ICT professionals. The transition from technology assurance to information assurance also impacts policies. Insurances for business. As businesses automate their operations, the risk profile changes. A greater vendor dependency occurs. The risks in transformation increase, and the liabilities from using artificial intelligence change the exposure of a business. Revised vendor dependencies and information supply chains sees revised policies and risk profiles. A corresponding change in the policies provided occurs. Transaction insurance. Financial organizations have already paid fines for the use of artificial intelligence in transaction approvals, such as lending liabilities assessments in mortgage approvals. This has not only impacted the insurance exposure of the respective business, but the policy provider changed the liabilities and exposure with related business impacts. Liquidity and treasury impacts may also see insurance policy responses. Insurance for advisory. For those involved in consulting and advisory, artificial intelligence also changes their risk profile with related policy variations. Advice provided dependent upon artificial intelligence has a raised risk profile with varying liabilities and revised policies. Services like project management, using project management as a service which uses artificial intelligence, also have revised risk profiles. Key people insurance. Businesses may insure key staff in relation to safety as well as liabilities and transfer of intellectual property. For some staff, artificial intelligence reduces their exposure, while for others, the exposure increases with corresponding policy variations. With automation and artificial intelligence, establishing causal link for key people also changes risk profile with policy impacts. The collective impacts coming from the use of artificial intelligence include changes in markets for the products and services demanded as a result of using artificial intelligence, requiring revised policies. commoditization of routine consumer insurances, changing the value proposition and business models, and revised policies. More power in the sales process to market aggregators with product comparison using artificial intelligence with revised policies and agent and third-party agreements. Artificial intelligence brings regulatory changes requiring revisions to policies, e.g. a gap exposure and indemnity limits. Specialist insurance and reinsurances portfolios may also be impacted from the changes resulting from artificial intelligence. Through the worked example of insurance and some impacts of artificial intelligence, a wider picture with applicability to other industries is seen. Thank you for your time. May the skills and expertise shared be of value to you and those you support in this changing world. Please subscribe, add your comments, and share with others.